We've seen in the institutional real estate space this move toward niche investing. And that's really been precipitated by a few things. Number one, there continues to be greater and greater allocation to private real estate. And so inevitably, when you've got more capital available, you have to find new places to invest that capital. But then you add to that the four main food groups historically have been multifamily, industrial, retail, and office. And office is like a four-letter word now. So you take much of the capital that would be deployed into one of the main four food groups and it goes away. Yet again, you have to find other places to invest. And then I'd add another layer to that, which is niche investing is generally perceived to be higher alpha generation than kind of market investing. So given that niche investing is more of interest today to the institutional investors, I thought it would be good for us to talk a little bit about how we see niche investing. What does it mean to us and our strategy?
For starters, it means specialization. It means not a general approach or an asset-specific approach, but two assets, one strategy in mid-sized cities, secondary and tertiary markets. By specializing in that and seeing trends that we can apply in the 7 markets that we work in, we're able to stand out. And that specialization for the geography and strategy is different than those that invest broadly or invest in primary markets.
Yeah, and I'd say our history has been one of moving towards specialization, not away from it.
Yeah.
Typically, as firms grow, they add additional strategies, additional asset types, because they're focused on growing their AUM. And in our case, what we found as we have singularly focused on investing in secondary and tertiary markets and in multi-tenant industrial and multifamily is we've actually refined down our scope. We used to invest across all 4 asset types, and now we really just focus on multifamily and specifically multi-tenant industrial.
It's really good for deal flow in that we have tailored broker, tenant, seller relationships in these specific markets. So when you are the most active buyer, in a given metro area, you are going to see the most deal flow. And when you get in with a seller that's transitioning to something new, sometimes you can do multiple assets with them and apply the same strategy multiple times, or you can have brokers that are working very specifically to find those types of deals. That's very helpful.
And niche investing also is a little bit of a market cycle hedge, because what we find is when times are good and when everybody's doing well, we have this natural tendency toward, well, maybe I should try this too. Maybe I should try that.
Yeah.
This looks interesting.
Yep.
Wow, I'm a genius in this.
Yeah.
And that niche focus really is a hedge against that, because it means you're going deep into something. And then through the market cycles, when you're in that down market cycle, is really when the experts emerge and flourish, because they're the ones that have focused on that narrow category.
Yeah. Well, and as you emerge as an expert, there's less competition. You already were operating in markets that have less competition, and when you're perceived as the expert and you have the deal flow and the closed transactions to prove it, it's self-validating in that you get more of those deals in a market that already has less competition. This leads to brand reputation. Sellers know who you are. You can stand out not having the highest price, but having the greatest ability to close because you've closed before.
Yeah, and just as you mentioned, the broker relationships, if someone is focusing on cold storage or mobile home parks, they know every single broker and every single vendor and every single tenant in that space. For us, it's the shift is really around geography instead of asset type. While we focus on multifamily and multi-tenant industrial, we do it in very specific geographies. And so we have those same efficiencies, those same economies of scale and efficiencies that others have in asset types, but we have them in geographies.
Yeah, so operational efficiency is a huge part of niche investing in that we have the same staff working the same strategies in the same places. So managing costs, using the same vendors, working with the same brokers and the same tenant pool. It's often that we'll see a tenant for one deal, it's not the right fit, but we have another deal that works for them. So it self-strengthens. Also, as we have strategies, like on multifamily strategy, it's certainly a few years ago, it was that RUBS wasn't being applied or new pieces of technology weren't being used that we're able to use and that allow us to stand out from our competition.
And I think investors, it seems, have more and more appreciated the niche investing and the focus on particular asset types or particular strategies. They've recognized that when you have control over the full process and you have an expertise in an area, you have a competitive advantage compared to others. That's why we've seen a much greater emphasis on real estate operating companies and vertically integrated operators where you have that full control of the value creation process.
I'll close with the idea of conviction. Conviction is among the most valuable things in investing. And when you're a niche investor and you're active like we are in 7 specific markets, we are seeing things happen on the ground that give us great strength in what we're doing. In Fresno right now, we have a $30 million apartment complex that has had 35 new leases signed in the last month. The level of interest and the number of deals we're signing is more than was anticipated or expected. And when those sorts of things happen, it gives you great strength and conviction to do more deals and to double down on what's going well.
So really, for the niche investor, one of the greatest muscles that they have is that ability to develop conviction and develop conviction swiftly because of the learned experience they have within that area. And fundamentally, that's why we love sticking with our asset types and secondary, tertiary markets.